Hello everyone, thank you for tuning into this video. I'm here today to help you better understand the difference between staffing services and outsourced services. My name is Payne and I've worked in legal and compliance roles within the staffing industry for over 15 years now. I advise a variety of recruitment businesses and consultancies, helping them navigate the often complex legal and regulatory landscape of their chosen fields. We've seen a recent trend in the market of more agencies looking to offer statement of work arrangements, whether that's to offset the reduced demand in recruitment services due to COVID, or as a result of the off-payroll rules being extended into the private sector. So I've put together this relatively short video to help you understand some of the issues and considerations. Before I get into the detail, I just want to touch on terminology. There are lots of names for essentially the same service. Now, I'll usually use statement of work just for consistency, but all these other descriptors are also used quite regularly. Let's start with some context then. Why would a business offer statement of work arrangements? And if it does, why is it even important to distinguish between statement of work and temporary recruitment or staffing? Well, it's worth noting that staffing and statement of work do sit on the same continuum of services, albeit at opposite ends. And it can be difficult to pinpoint exactly when statement of work becomes labour supply. But in general, the greater degree of risk taken and reward gained by the service provider, the more likely it is to be an outsourced service. Statement of work is often a natural progression from staffing, but there are some key differences between the two, which we'll go through today. Another point to note is the way that outsourced services are defined has a significant impact on the new off-payroll rules coming into the private sector in April 2021. So if you are thinking of offering statement of work arrangements to your clients, it's important that any contracts are structured properly and correctly to avoid confusion and problems in the coming months. So what are the hallmarks of a statement of work contract, and how do these types of services differ from standard staffing? Well, temporary recruitment or staffing is at its heart a source and payroll service. A client identifies a need within their own business for a certain skill set or set of tasks that need to be completed. The client determines and defines the work to be done by the contractor. The client then engages an agency to find and pay a suitably skilled individual to carry out the work that the client has defined. The agency is required to check the suitability of contractors that they introduce to clients, but they're not required to actually monitor the work done by the contractor or to guarantee the quality or timings of the contractor's services. On the flip side, statement of work is where an entire service or project is outsourced to another company. A key characteristic of true statement of work arrangements is that they normally involve the provision of goods and materials, not just people or labour. Statement of work contracts make the outsourced service provider responsible and contractually liable for delivering an entire service and meeting agreed quality standards and deadlines, whereas the function of a recruitment agency is to provide people to support the client's own delivery of that service. So ownership of the outcome is key to deciding whether a service is outsourced. If the success or otherwise of the project is owned by the service provider, then it will usually be a genuinely outsourced service. If the customer retains ownership of the outcome, it's probably not. Another feature of statement of work is that customers are generally charged a fixed price, and invoices are sent upon completion of fixed milestones or deliverables, not regularly on a weekly or monthly basis. Now, time and materials-based services, as opposed to fixed price, well, they can work, but they won't be considered contracted out for the purposes of the off-payroll rules. So depending on your reasons for offering statement of work, time and materials-based arrangements might not be an option. So why offer statement of work at all? What are the advantages? Well, as I'm sure you're more than aware, the staffing industry is inextricably linked to the economy. It tends to be one of the first industries to be affected during periods of downturn, though thankfully one of the first to recover as well. As a result of COVID and the subsequent recession, there is reduced demand for recruitment services. So many recruiters are looking to diversify their portfolios, and that means finding new and different solutions to offer to clients. One of the advantages of statement of work is that these types of arrangements usually increase when the economy declines. Many companies are reducing their internal headcount, both temp and perm, but they still have projects that they need to complete or products that they need to develop. And if they can't utilise individual contractors to augment their internal capabilities due to headcount freezes, well, then they need end-to-end delivery of an entire piece of work by an outsourced provider, hence the increased need, which means there's a lot of work out there. It is a larger pie than recruitment, therefore, in theory, more opportunity for you to get your piece of it. Another advantage is that fixed price contracts mean closed book pricing. You're pricing for a whole service, not for individual people. So there isn't the same degree of transparency with costs, which can work to your advantage. Generally, statement of work attracts much higher margins, although there are significantly more costs and risks to you. So you need those higher margins if you're going to make a profit. As you're not acting as an agency, you don't need to be included on the client's agency preferred supplier list, which we know they can be difficult to get onto and usually means your margins are pretty restricted. Statement of work contracts aren't generally managed by HR and they don't go via any MSP arrangements. They are generally managed by individual business units or procurement, and that can reduce some of the red tape associated with liaising with HR or via an MSP. Now on to some of the kind of practical and commercial considerations related to statement of work. You do need to appreciate the significantly increased risks. The contractual obligations will generally be far more onerous than staffing contracts in terms of warranties and indemnities. You will be agreeing liabilities for performance and delivery of whatever you're supplying to your customer. And you'll need to manage your performance against those obligations much more closely than you do with recruitment services, because the penalties are likely to be far more severe. You will be contractually responsible for what you do and how you perform, but also the actions and performance of your staff and the work they produce. And that includes any contractors you might use to deliver the services. And that's different to staffing, where generally you're not responsible for the quality of work performed by a contractor. Scoping of the project is key. Mismatch of expectations about what the service entails is the most common cause for disputes in statement of work arrangements. So make sure that you and your customer know exactly what the service is, and equally importantly, what it is not, what is out of scope. You'll also need to have a plan for how you'll pay your contractors, because they'll need to be paid on a weekly or monthly basis. But you might only be invoicing clients on delivery of milestones, and they might be many months apart. So how will you cover those working capital costs? Financing from the banks for staffing services generally requires certainty of payment, and they'll use contractor timesheets signed by clients in order for you to be able to access the funding. Certainly that's how invoice discounting works. But clients won't be signing timesheets. If you're delivering a whole service, the client won't even know if you're using permanent employees or contractors to complete the work. So often you can't get the same financing options, and sometimes you can't get any financing at all for statement of work. If you do get financing, then the bank will usually need to review and approve all customer contracts before they're signed, which can lead to delays and further negotiations. Business insurances particularly professional indemnity insurance and sometimes credit insurance as well, do not cover statement of work as standard. Any service that doesn't rely on customers signing timesheets is generally excluded from cover. So you will need separate additional insurances to do statement of work, and it is very expensive. So you'll need to get your insurance to give you some estimated costs up front and make sure those costs are included when you're pricing the project to your customer. The insurer will also want to review and approve most, if not all, customer contracts to confirm that they will cover it. And insurers can be pretty risk averse and they will exclude cover quite regularly. So you may need to accept that some arrangements won't be covered by insurance at all. Another key consideration is the fact that there's a lot less automation of processes in statement of work compared with staffing. For example, because clients won't be signing contractor timesheets, well, they won't be processed via your current pay and bill systems or processes. Sign off by the client on completed milestones will be a manual process and probably a different process for each client. Therefore, generating invoices will also be a manual process. There are far fewer economies of scale when you consider the administrative aspects of statement of work, since the projects are usually quite different and you'll generally be required to align to your client's processes rather than any standard processes of your own. You also need to think about whether you have suitable people and skills to manage statement of work. For example, you'll probably need to hire at least one project manager, perhaps also a bid writer if you don't have one at the moment, because statement of work arrangements are usually released via official tender. You'll also need to get your client's contracts reviewed by a legal professional, since statement of work contracts are very different from recruitment contracts and generally far more onerous. If you use contractors to deliver the services covered by the statement of work, which is likely, at least at the start, since you probably won't have the staff internally with the skill set to do the actual work, then you need to be sure that those contractors can deliver to the service specification that you've agreed with your customer and that they have exactly the right skill set. You'll be responsible for any contractor's actions, omissions, performance, delays, etc. So choosing the right people to perform any aspect of the service is really important. A good idea if you're just starting out is to partner with a small consultancy to deliver statement of work projects together. The consultancy will have existing experience of costing, scoping, resource planning and project management. Agencies tend to have more financial stability and more access to contractors. So together you can potentially deliver to more customers and on bigger projects. One question I'm often asked is whether a business should use a separate company or entity for statement of work. And there are some pros and cons, so I'll cover these off quite quickly. Using a different company just to deliver your statement of work contracts means that you maintain separation from the recruitment or staffing services. And that might help to show that your statement of work arrangements are completely different and a totally separate service line, and therefore perhaps less likely to be considered just recruitment with a wrapper. Using a different entity also minimises disruption to your core business, that is your staffing business, if for any reason the statement of work company ceases trading or dissolves. Depending on the entity's incorporation date, their size and group structure, it might be a small company for the purposes of the new off-payroll rules, which means you could be exempt from having to assess IR35 status for any PSC contractors you use to deliver the services. But there are particular rules around groups and connected companies, so the exemption might not apply even if the entity considered in isolation would be considered small. If you're using a newly incorporated or previously dormant entity to supply statement of work services, there could be issues with that company's trading and credit history, and that might result in customers refusing to trade with that entity because it's failed their pre-engagement checks. And giving your client a parent or sister company guarantee from your recruitment business to help offset that lack of credit history will expose your core business to liabilities anyway, which negates the value of having any separation. Going from one company to multiple entities adds administration. You've got another set of management and year-end accounts, for example, unless, of course, you're already part of a group structure, in which case one more entity might not be too much of a problem. I've made mention of the off-payroll rules a couple of times, so I'm going to briefly explain how statement of work arrangements and the new rules interact, because when a project or service is fully outsourced, the responsibilities of the various parties under the off-payroll rules change. When you're acting as a staffing business, you're simply an intermediary in the supply chain, or you are the fee payer. So it's your client who has to undertake IR35 assessments on any PSC or limited company contractors you supply to them. The fee payer is then the company required to make any deductions from the payment to the PSC for income tax and employees' national insurance. And of course, it's the fee payer who also becomes responsible for paying the employer's national insurance. If you're delivering statement of work on a fully contracted out basis, and that's the term that HMRC uses, then you actually become the client for the purposes of the off-payroll regime. And that's because your customer, the company that you're providing the outsourced service to, isn't buying people from you. It's buying an entire service within which an individual contractor's services wouldn't be divisible. So the customer therefore has no obligations or liabilities under the off-payroll rules. The statement of work provider, that's you, is the party responsible for undertaking IR35 status assessments. And if you're also paying the PSC, you'll be the fee payer as well. You as the service provider must therefore consider whether the off-payroll rules need to be applied at all, because as I've already mentioned, small companies are exempt. And if they do need to be applied, you'll need to make IR35 status determinations for any PSC contractors you use to deliver statement of work arrangements after the 6th of April 2021. HMRC is very aware of sham outsourcing arrangements being used to artificially change the responsibilities of the parties under the off-payroll rules. And HMRC's internal staff manual, which is used by their IR35 enforcement team, gives examples of what they consider to be outsourced services and not. And I would really encourage you to read the relevant section of the manual in some detail, and the link to it is included on this slide. HMRC will probably work off the assumption that recruitment businesses are supplying labour rather than fully outsourced services. So you need any statement of work contracts to be really clearly contracted out. If HMRC look at the statement of work arrangements at some time in the future and believe that actually it was a staffing arrangement, well then any IR35 assessments you've undertaken will be invalid, and the legal obligation to have made the status determinations will be on your customer. But the customer won't have done status determinations because they believe that was your responsibility. And it's the customer that HMRC will then pursue for any tax and national insurance liabilities under the off-payroll rules. If for any reason you've given the customer any tax-related indemnities, then potentially you'll be required to reimburse the customer for their losses, which can easily exceed tens of thousands of pounds per contractor per tax year. So the key takeaways regarding the off-payroll rules as they relate to statement of work are as follows. To ensure clarity of responsibilities, make absolutely sure that any statement of work contract is a genuinely outsourced service. Don't give tax indemnities to your customer just in case HMRC decides the arrangement was actually one of labour supply. Make sure you understand if you are the client or the fee payer or both under the off-payroll rules, and make sure you comply with your obligations depending on what your role is within the off-payroll regime. Obviously, the contractual arrangements for statement of work will vary greatly due to the sheer variety of projects and services that might possibly be outsourced. The complexity of the contract will depend on the subject matter, the size and scale of the service, and the parties entering into the agreement. They can be many hundreds of pages long, hence my advice that a legal expert should review them before you sign. Having said that, most of the commercial documentation is somewhat similar in the sense of what it includes as an absolute minimum, and those are the areas I've listed on the slide. So the client requirement is a brief description of the client's problem or need. The solution overview is a brief description of the project's purpose, as opposed to the project itself, and how the outsourced service is going to address the client's needs. The scope is that detailed section that covers exactly what the service is or does, what the service provider is going to be doing. And there does need to be quite a lot of detail in here to ensure all the parties fully understand the nature of the service. And as I've mentioned, you should definitely include a section for exclusions, what's not included in the service. The section on deliverables will include any milestones or outcomes that need to be achieved by the outsourced service, and you should probably include sign-off processes for those milestones in here too. Performance markers means any specified standards, KPIs, service levels, guarantees, etc., and you should also include any client-specific or regulatory requirements in here as well. In the schedule or timescale section, you include all important delivery dates, such as milestone dates, as well as any time restrictions or deadlines and the expected project duration. For the costs and payments section, obviously, that will include what the total cost will be, but also what each individual payment will be if you're using milestone payments, anything that's needed to precipitate the payment, so a client sign-off of a particular deliverable perhaps, but also the invoicing process and payment terms. Well, that's the end of this video. I hope you found the information in this session useful, and if there are any queries or you'd like to contact me directly, my details are on the screen. Thank you so much for watching.